Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, as sellers continue to get more and more desperate, price cuts are starting to spread around the nation. And one of the things that I've noticed, you guys, and I'm going to show you in today's video, is many of these price cuts are actually coming from homes that are vacant and empty, which puts additional pressure on the sellers to have to sell their home more quickly because obviously they have a mortgage more than likely that they have to pay. So obviously this is going to continue to spread across the nation, and the market, the housing market, is going to continue to get gutted. But the question is when will that happen, and how long will we have buying opportunities? And that's what we're going to really investigate today, you guys. And as you know, this video is my Thursday housing market update. So we're going to explore what the new average 30-year fixed rate is as said by Fred Economic Data. Then we're going to jump on MLS, and I'm going to show you guys more price cuts. I'm going to show you that those price cuts are coming from a lot of houses that are vacant, and I'm going to show you more listings that are at $120 or under a square foot that are not old homes. They're actually new homes now that are under $120 a square foot. So my local market, you guys, is changing drastically. And then we're going to end taking another look at the 10 and the 2, and I am certain that it's going to be inverted yet again, probably in July. So my eyes are on the 2 and the 10. Look out for that inversion. Look out for Q2 GDP. There's so many things happening right now, you guys. It is unbelievable. There's so many data sets that are trying to change the housing market. It is fixing to completely shatter. And now, as you guys know, I'm not a financial advisor. This is my personal YouTube channel. I share with you guys my thoughts and my opinions, even though my bio is as a realtor, loan officer, and instructor. I'm not yours, at least not yet. If you guys can, for all of my effort trying to get you guys a video a day, please like this video, subscribe to my channel, you guys, if you haven't, and please, you guys, comment below. You have no idea how often I talk about all of the subscribers that take their time to share their intel and to share their expertise. It doesn't go on deaf ears. So thank you, guys. But what we're going to do, guys, is we're going to jump into the interest rates from Fred Economic Data, which updates their graph every Thursday right now. Now, you guys probably remember me saying last week that the rates are probably going to plateau or at least go up and down until July. And in July, they're probably going to skyrocket again. So having said that, here's the Fred Economic Data chart. This is 30-year fixed rate mortgages. I suggest you guys bookmark this. The average rate is now 5.7. Okay, so it went from 5.81 to 5.7. That is an 11 basis point decrease or a 1.1 purchasing power given back. But again, you guys, don't think that the rates are going to trend downward. In July, when the Federal Reserve lifts the federal funds rate more than likely 75 basis points, we're probably going to have another spike in July and probably again in September. And just to show you guys, you can see here that they were starting to plateau here as well and even go down, right? But look at, you know, if you thought that rates were going down here, boom, look at the spike, massive spike. We haven't had a spike like this, I don't think, since 1994. Right? This one-day spike. So don't think that this is going to trend this way. It's going to skyrocket. And you guys, this is why I think mortgage applications were up, because of the plateauing rates. So what I suspect is going to happen, you know, there's probably going to be an increase in mortgage demand because of the plateauing and balancing interest rates. Rate locks are going to matter again because, again, it's going up and down, at least until the end of July when the Federal Reserve meets again. But you guys, I mean, look at, you know, let me go down on this chart. Look at the skyrocketing, you know, look at the skyrocketing interest rates. 3.05 back in December, all the way up to 5.7. That's almost doubled. That's almost doubled, you guys, in 6 months. That's shocking, right? This is a shocking raising of interest rates. And quite frankly, we need this. We want this. You know, this is healthy. This is what we need. This is a necessary evil, quite frankly, because the Federal Reserve is obviously late to the party. Obviously, these measures should have happened in 2021, but they didn't. Now, here's the crazy thing to think about. Okay, listen to what I'm saying. What if the Federal Reserve overcorrects, right? It's possible because this, again, you guys, listen, this housing market's not like 2008. This is a fake, artificially created housing market, which is why I don't think it's going to crash as long as 2008. But think about this. If the Federal Reserve overcorrects and prices start plummeting, inventory starts going up, you guys, we're going to get a deal of a lifetime. And this is what I'm scared is going to happen. If they overcorrect, they will immediately flip-flop, right? Which will decrease our buying opportunities. And that's why I keep telling you, I have so many eggs in the 2023 basket. I think that it's possible that they overcorrect and that they're going to reverse course at the end of 2023 or into 2024, just in time for elections. So I'm personally doubling down. I'm doubling down on my preparation. Either way, you guys, let's hop on my MLS right now. And I'm going to show you the trends in my local housing market. The price cuts in my local housing market are insane. I'm getting a lot more price cuts, a lot more inventory. And now sellers are listing their houses for more reasonable prices. Take a look at this. Okay, guys, so here's my MLS. Here's Houston. Now, you guys know that I don't think it's usually a good idea to live downtown, right? I like to move outside of downtown to the suburbs because it's usually a lot more affordable. So obviously, I've been sticking with Kingwood. I had to pick one city, and I'm going to stick with it, which is Kingwood. The disadvantage of that is it's limiting, but the advantage is we get to learn the trends and how to read a housing market. So here's Kingwood. As you guys can see, I've taken off of pending sales now because we have so much inventory. I don't even want to show pending, but look at all this inventory. When I first started doing these updates about 3 months ago, we had what, 1/3 of this inventory? I mean, this is a shocking amount of inventory. So what I want to do first, guys, is I want to show you some price cuts right now. All right, let me show you the first one, guys, which should be right here at $499. Let's take a look at this one right now. Okay, so here we go. Okay, so here's a price cut, massive price cut of $25,000. So this is a $25,000 price cut, and now it is in the $120 a square foot. Only been on the market 15 days, and this is a nice house, guys. I mean, look at some of these pictures. It's got a pool. It's not an older house. I mean, it's nice. And one thing that I'm noticing, look, it is vacant. So my question is how much longer is this seller willing to pay the mortgage before they drop the house even more? But this is super reassuring, guys, because, homes with pools usually go fast. This is empty. So this seller is probably going to get more desperate as time goes on. And I'm noticing that trend a lot with the price cuts. Let's look at another one. Okay, guys, so I'm going to go up a little bit. Take a look at this price cut right here. All right, let's take a look at this. Look at a massive price cut right here, as you can see, of $20,000. And this is recent, right? One back down to $136 a square foot. Look at 181 days on the market, y'all. That is absolutely bonkers that's been on the market so long. Take a look at these pictures. It's not exactly a nasty house. This is actually a pretty nice house, right? Take a look. Look at this. Look how nice this house is. And what do you guys notice? What do you notice? It's empty. The sellers are going to continuously get more and more desperate, have more and more fear that if they don't lower their prices, they're going to miss out on the opportunity to sell another vacant home, you guys. Look at that. Another vacant home, $20,000 price cut. Let me show you guys one more right this minute and tell me what you think about this one. Okay, now this next one is right over here. Take a look at this, y'all. This is so cool. I'm starting to get excited. Now take a look at this. Okay. So the price cut here, $35,000 price cut. $35,000 price cut, you guys. Only $121 a square foot. Only been on the market 16 days. That smells of desperation from the seller. Only 16 days already. $35,000 drop. And it's priced right. And look at how nice this house is. Look at this. Everyone's like, oh, the houses are too old. You can't do that. Look at this. This is a super nice house. This is so nice. $121 a square foot. They can't sell it. They had to drop $35,000 and it's still not under contract. Y'all see what I'm saying here? Now take a look at this. I want to show you guys something about the new builders because you guys have been following along with new builders. So check this out. Okay, so take a look at these new builders, guys. I want to show you what they've done. So in order to hide all of the price cuts, and I made a video and I wanted to show you guys like $40,000, $50,000 price cuts of these new builders, but they actually reset the listing. So I lost that data. But look they did it again. Look at this, okay? They've actually relisted all of these homes with another agent. So another agent has relisted this whole cluster here and basically updated the listing price so that we cannot see if they're going down or up. Same thing right here. So this pile of houses, this group of houses, and this group of new builds has the same new realtor, and that new realtor has adjusted all the listings. So now we can't compare and really see how much they've actually dropped these houses because it's been reset. Very clever, very, very clever. But what I want to do, guys, is let me show you some more houses that came on the market at $100, $120 a square foot, or about $120 a square foot. Here's one right here at 260. Take a look at this, guys. 1 day on the market, $112 a square foot. Do you see that? They're pricing them more reasonably. Let's take a look at another one now. Okay, so right here's another one. Take a look at this one right now. $118 a square foot. 15 days on the market. You guys know that I've been looking for 120. 120 was my baseline so that we had something to go off of. Now we're finding that all day. All right, let's look at one more now that I want to show you. Okay, let me zoom in. Okay, so here's the one at 430. Take a look at this listing. And this is what I mean, that the listings are now coming on the market for more reasonable prices. Take a look, you guys. Remember I said last video, now I'm looking for $110 a square foot. Y'all remember that? Look at $110 a square foot. Been on the market 17 days. This is a nice house. Look at how nice this house is. Look at this. This is so nice. It's been on the market 17 days, $110 a square foot, and nobody has bought this house. And this is not an old house. It's got a deck in the back, granite countertops, stainless steel appliances. This is a really nice house, actually. It's a little bit big for my taste. Now, obviously, the bigger the house is, usually the lower the square foot, but we couldn't find this, $110 a square foot. You guys, this is absolutely great news. You're going to start seeing this spread across the nation, spread to your local metro area. So again, I say, especially if you're in Florida, right? And on the East Coast, you guys stay patient. You can see what's happening in my personal housing market, right? These trends, they're going to spread across the nation because the interest rates going up like this are happening in every state, in every county, in every city. There's no city or state or county that's going to be immune to this crash, to the unaffordability, and to the recession. Mark my words on that, you guys. But this is absolutely great news. And again, you guys, these houses that are cutting prices, a lot of them have no one in the houses. And all that's going to do is put more and more pressure on the sellers to greatly reduce their asking prices. But here, I want to mention this, another source of inventory that I have not been talking about, you guys, investor dump. It is possible that investors dump more inventory on the market, and that's where we get our inventory. I'll say that for another video, but where I want to end this video, you guys, take a look at the yields right now. Okay, now this is as of this morning, 6:30, so June 30th, 10:42 a.m. Eastern time. But look at, again, we're measuring the 2-year right here and the 10-year. Now the 10-year actually went down. It's only 3%. So that's actually, I want to see us go up because I want the crash to be over with. So this is kind of bad news for me, but good news if you don't want the market to crash. But here's the thing, 2.97, 3%. This is 4 basis points yet again from inversion. I expect the 2 and the 10 to invert probably in July. Obviously, the 5 is already higher and the 3 is already higher. So this is inverted and the 3-year is also inverted. But again, you guys, I'm saying all of this to you because more than likely we're in a recession right now, or we're going to be in a confirmed recession. And once the recession hits, the confirmation hits, all of the trends that we've been studying and we've been going over for the last 3 months are going to spiral out of control, or they're going to pick up speed like crazy. The housing market is going to crash. I believe the Federal Reserve is going to be like, whoops, we overcorrected, and it's possible they flip-flop us again. So my point is, in telling you all this, guys, and here's how I want to conclude this video, double down on your preparation. Double down on your preparation to purchase at the end of 2022 and into 2023, because I don't know how long there's going to be buying opportunities, because we've never seen anything like this. 2024 is an election year. It's possible that the Federal Reserve flip-flops in 2024. And if they flip-flop, obviously the demand is going to come back into the market and supply will go down once again. So I think that's possible. So I'm double downing for the end of 2022 and into 2023, which means my reckless spending habits even more under control. I'm saving even more money. I'm making even more money on my side hustles, right? My credit's even better. I have absolutely no consumer debt. That's what y'all need to do. But one of the most important things of all, understand the trends of your local housing market, because one thing that we've learned, we cannot trust all agents. It is what it is. And having said that, if you know an outstanding realtor, an outstanding loan officer, cherish that relationship because it's rare to find. All right. So other than that, guys, that's my 2 cents. I really appreciate you following along with me in this video. And if you're out there investing in real estate, I do wish you luck and I hope you win.